This is the outlook for cattle, and this is work with Kevin Hanrahan of Rural Economy. So 2021 can be described as a year of inflation, when we have inflation both on the output side and on the input side. We observe a 12% increase in steer prices, but at the same time, increases in input costs of about 8% on average. Mark prices are up by between 8 and 9% in 2021. So bigger increases in percentage terms for finished cattle prices than for weanings or stores. Total input costs then offsetting output price increases on many farms. But overall, on average, gross margin on cattle rearing is up by an average 4% and by an average of 9% on the cattle finishing enterprise. However, no major changes really in the net margins in 2021 due to the increase in overhead costs. Some improvements for cattle finishing, but as we can see here, in cattle rearing enterprise, the costs have impacted in 2021. While output is up 7%, total costs are also up by 7%. So average net margin really doesn't change very much in 2021. And then there with an average of minus €30 in 2021. And on the right hand side, you can see the gross margin over time. €483 average in 2021 is estimated, and that is an improvement on some of the previous years, but still in terms of net margin, the average is negative in 2021. Now on to cattle finishing then, you see that the average in the cattle finishing enterprise is up slightly in 2021. Gross output up by 11% due to the increase in finished prices. Gross margin up 9%. There you can see that the average net margin only increases slightly in 2021, going to minus €36 per hectare. If we're to look at the gross margin on the right hand side, you can see that we have an average of €522 per hectare in 2021 estimated. Again, this is a somewhat improvement on the last three or 4 years, but still in terms of net margin, you have an average of minus €36 in 2021. Looking more closely then at the top third of cattle finishing, you see that the yes, output and margin are up significantly. So too, the net margin is up, improving from €183 in 2020 to an estimate of €255 in 2021. So this group of cattle finishers have improved in 2021 in terms of their margins. The gross margin exceeding €1,000 per hectare for the average cattle finisher in the top third. So that's just the top third of cattle finishing. Moving on then to cattle rearing, I'm just looking at the top third there, and it's fairly stable in 2021 if you're to compare with 2020. And no major changes there. The improvement in output being offset to a large extent really by the increase in input prices. Again, the gross margins and net margins are a little bit better than in 2018 or 2019. Still, note that the average net margin per hectare there is €163 for the top third cattle rearing. As Fiona has spoken about, the input expenditures are up significantly on the cattle enterprises in 2021 as well. And there you can see that the total costs are up by about 7% in 2021. And that's largely due to the increase in feed prices, electricity, motor fuel, and also pasture and forage, including fertilizer. And so the expenditures are up quite a bit in 2021. There you can see on the left-hand side the breakdown between the different components. It's a similar story then on the cattle finishing, and even to a greater extent really, the costs are up by 9% on average for the cattle finishing enterprise. And there, feed is very important, and also the energy, electricity and fuel and pasture and forage all contributing to an increase in total costs of 9% in 2021. On the output side, the beef prices have on average been higher in 2021. And if you look at the year over time, you'll see there that early on in the year, prices were just above where they were in 2020. But then as we entered the summer months, prices improved quite a lot through the summer and remained relatively high in the autumn period and going into the early winter. So finishers in the autumn would have benefited from the much higher prices than were gained in previous years. Steer cattle production is less volatile in 2021 than in 2020, but it's also down. It's down by about 2% in 2021, and you can see there early on in the year you have relatively lower production in 2021, and that's partly due to the hangover from Brexit. In 2020, you can see in the spring period the decline due to the impact of COVID-19. But overall, you can see in both years that the production is higher going into the autumn, late summer autumn period, and so that points to some degree of seasonality in the production. And taking a closer look at the prime cattle production and steers, bullocks, heifers, and young bulls, you can see there that yes, the production is much stronger in the late summer autumn period relative to early on in the year. This coincides with the improved prices through the autumn period into the early winter. So beef exports are very important to the beef sector in Ireland, and here we can see that yes, the UK remains very important in terms of the share of exports at 44% in 2021 of the first 8 months of the year. The EU share is rising, so it seems to be rising. And in 2021, we can report an export share of 43% for the EU, and this is a good deal higher than the 36% that was reported in 2020 for the same period. Now, looking forward to 2022, there's a lot of things that have to be taken into account, both on the input side and on the output side. We know that the inputs prices are increasing, and this will be very important looking into 2022. So the actual forecast for input expenditures is of an increase on average of about 12%. So this is bigger than the increase in 2021, and this is driven by feed, but also feed fertilizer prices. So you have pasture and forage increasing by a third in terms of expenditure, and feed forecasted to increase by 10% in expenditure, and also significant increases elsewhere, including electricity and fuel. On the output side, there are a lot of things happening. Consumer beef prices are at record levels in many parts of the world, are approaching record levels. And in terms of COVID-19, it continues to be important and appears to be affecting Europe and the UK as we enter the first quarter of 2022. So that is a concern. At the same time, EU production is projected to decline in 2022. You can see there on the right-hand side the table where the European Commission has forecasted a decrease of 0.9% in production in 2022, and this can be attributed to the contraction in the dairy herd in Europe. At the same time, the Commission is projecting a continued decline in domestic use, which is essentially consumption. Now you can see over time a trend towards lower consumption over time. In 2022, though, imports will be quite important because of the rising shipping costs and the likelihood that this will limit imports in 2022. We have a situation where production is set to decline by about 0.9%. So imports could turn out to be important in terms of determining price levels and so on. Looking more closely at the trends in imports and exports in the last number of years, there you can see that imports lower in the last couple of years than in 2018, 2019, and also that the Commission has forecasted an increase in exports in 2022. But there is some uncertainty about these forecasts, of course, both in terms of consumption and trade in 2022. We must continue to consider that the beef sector in Ireland depends quite a lot on exports and the food service sector in our key export destinations, including the UK. And here you can see on the right-hand side, in 2021, you had a collapse in open table seated dining in the UK in the first 3 or 4 months of the year, which ultimately affects the demand for our beef and the beef price as well. For the second half of the year, then the level of food service activity is actually greater than in 2019, so it means significantly above. So we need to keep an eye on these type of indicators, both in the UK and elsewhere in terms of our key export destinations, because ultimately exports are really important to the beef sector in Ireland. So in 2022, we forecast no change in steer prices from their current levels. We see a relatively low probability of a price decline in 2022, given what is forecast in terms of EU supply and use and production and consumption in our key export destinations. However, the squeeze on cattle finishing margins will mean that a reduced demand is forecasted for young cattle, and this could materialize in a 3% decline in young cattle prices in 2022. Now, we do forecast a 12% increase in input costs on average. So this is the main reason really why the forecast is for a major decrease in gross margin, both on the cattle rearing and the cattle finishing enterprise, and particularly on the cattle rearing enterprise, with a forecast of 22% decline in gross margin and a 10% decline on cattle finishing. Now, the greater decline on the cattle rearing is due to the forecasted decline in young cattle prices, and more significantly, the increase in input prices. So there's an indirect effect on young cattle prices forecast as a result of the reduction in cattle finishing margin. Here we can see the impact on the average gross margin and net margin that is forecasted in 2022. And the net margins there of minus €157 on the single suckling and minus €117 on cattle finishing are well below the averages of the last 5 to 10 years. So input prices having a major impact on margins on both cattle finishing enterprise and single suckling. So in conclusion, in 2021, we faced the challenges of COVID-19. We continue to face those challenges. No major changes really in cattle farm income. Some farms will have gained, particularly those maybe with a specialist cattle finishing enterprise. But you'll see stability or small declines elsewhere. Cattle prices increased sharply, but were offset largely by the rise in input prices. We observed really significant strengthening in the sterling exchange rate in 2021, and also increases in consumer prices in the UK and globally, reaching record levels in many parts of the world. In 2022, then, we will continue to face the challenges around COVID-19, particularly the early part of the year. Fertilizer prices are a major influence on our forecasts for 2022. And more positively then, we forecasted a decline in EU production and no real change in UK production. So these are key export destinations. Consumer demand will continue to be really important in our key export destinations. Whether or not we can increase that export share to the EU in 2022 certainly was the case in this year, but hopefully there will be scope to increase the EU export share in 2022. Thank you.